Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Brent Moores, who I've been working with for the better part of, well, coming up on now almost 3 decades. And so it's good to have Brent here in the chat helping out to answer those questions. Brent is an oftentimes substitute filling in for me, and a great help that is when I have the opportunity to be elsewhere doing other things. So I'm glad to have Brent here helping to answer those questions. If you're here with us live, be a part of that conversation, chat in your questions and your comments. In fact, I've got a poll going right there in the chat right now. If you wouldn't mind taking a minute to fill that out. When you get a second, I'll leave that up and running for a little while here. Now, if you're in the recorded version, you can't chat with us, but you can, in fact, leave a comment, and we'll get to that comment in as quickly as we can and respond to that. Now, there's a bunch of stuff moving today. Interestingly, some of the energy products that we've seen and been talking about are actually moving down a little bit. Some of those energy products moving up. So we're going to talk about that. We're going to talk about grains today because given recent crop reports and given recent expectations for potential demand for some grains, corn and wheat particularly, and maybe even soybeans, not necessarily a grain, but an agricultural crop nonetheless, there is some potential for some bullishness there. We'll take a look at that and see what that looks like. As we get into this discussion, we may also talk a little bit about the intersection of crypto and crypto futures, virtual currency products. We'll talk about that as we get into some of the disclosures here. But interesting day nonetheless. It is Tuesday, which oftentimes means a little bit of a turnaround in the market. We'll see if that is, in fact, playing itself out. But before we get to that, a couple of quick housekeeping items. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not any kind of a recommendation or solicitation or advice about a particular strategy or account type or anything else. Remember that futures and futures options trading involves substantial risk. It is not suitable for all investors. Make sure you read the risk disclosure statement for futures and options prior to considering any futures products and futures transactions. Excuse me. Sorry. As we get into this discussion throughout this webcast today, we'll be keeping in mind and talking about the initial margin and the maintenance margin for getting into a position and for maintaining a position. That futures margin, sometimes referred to as a performance bond, is an amount of money in an account tied up to establish a futures position, whether long or short. Because it's a little bit different. We're not necessarily buying nor selling the contract. We're establishing a long position or a short position. So we may use that reference frame of buying or selling, but it's more appropriate to be long the contract or short the contract. We'll talk about what that means as we get into some of these discussions. Remember, of course, every investing involves risk. Every strategy has that potential for risk, including the loss of principal. And in products like futures, the loss of more than the initial margin in the account is certainly a possibility. So we'll talk through those ideas as well. Again, stop orders in futures products behave a little bit differently than they do in an equity product. Exchange rules dictate that given certain conditions, market orders that would be fill at the next available price are going to be either rejected or substituted by an exchange designated limit order within a specific range. If that range is exceeded by a fast-moving market, there is the potential that that order does not get filled, or that it also fills at a different price than was expected. So just be aware of that as you get into this and start perhaps trading these products. We're going to be using the Thinkorswim desktop software platform, specifically the paper money version of that platform. It is a great learning environment. However, it does have some differences between paper money and a live trading environment. One of those differences is that it doesn't allow for the use of studies in scans and searches. The other difference is primarily in fill prices. Paper money will typically fill with an algorithmic based fill, usually at the midpoint. live trading accounts are going to fill based on market forces, and so those are going to be sometimes different. Now, one other note really quickly, I mentioned cryptocurrency and virtual currency products, derivatives. Virtual currency derivatives involves unique and significant risk. Make sure that you read the NFA Investor Advisory and the CFTC Customer Advisory about those particular products. All right, let's pop back over here and take a look at what's going on in the equity futures at the moment as the market is just now up and running. And we're starting to see those equity futures moving down a little bit here. ES futures, we're still kind of in the later stages of earnings season. And so those earnings, especially we get into some of these retail earnings, Home Depot, Target, and others, that's going to give a read on things like consumer confidence, on retail durability, if you will, in terms of the trend, what consumers are doing. And that's having a little bit of weight to the ES here. Now, that is not the only factor. Retail and consumer demand and earnings and those types of things. Those are not the only factors weighing on the ES. Obviously, we have geopolitical risk. We have a new Fed chair being sworn in at the end of the week. We have interest rate moves. So all of that's kind of coming to bear on the S&P 500 futures here, and starting to see that little bit of a downward push, at least initially today. Now, the NASDAQ futures, the more tech-heavy NASDAQ futures, saw a little bit more of that yesterday, but now maybe seeing a little bit of a continuation to that. So a couple of kind of spinning top candles here on the NQ contract, suggesting that maybe there's a little bit of kind of wait and see. We've got some, obviously some, whenever isn't there news in, say, for instance, the chip space, in the AI space. And so I think a lot of that is kind of weighing on the market here, kind of finding a direction. And it seems to be somewhat, if you want to say sideways is not a direction, it seems to be somewhat trendless, at least at the moment. It's not really finding a bit of a direction. There's a bit of equilibrium here. Momentum is falling off, but flattening out. So not a lot of push to the downside, but neither is there much push to the upside. Buyers and sellers are roughly equally balanced here. And the Russell 2000, however, on the other side of that equation, as we see interest rates rise, to perhaps placate in the short term bond vigilantes, those that are coming after those bond prices, you start to see this maybe move to the downside. And that perhaps I think is the biggest impact to the Russell 2000. Strong momentum push to the downside, big bearish divergence on the Russell 2000. RSI, one metric, not the only metric for momentum or sentiment, depending on how you view it, but simply one metric showing a big push to the downside, consistent with or somewhat divergent from the slightly higher low. Now, that would suggest that maybe there's a bit of a pause type of methodology here, kind of moving sideways. We've got a level of support in the Russell 2000 forward slash RTY, kind of sitting right here. Maybe a little bit of a move to that point. It would not be, from a price pattern perspective, it would not be out of fashion for this to maybe make a little bit of a bounce here on the right-hand side as it bounces up off of a support level and then maybe break down through. That would be consistent with the idea of a head and shoulders type of top here in the Russell 2000 E-mini futures. With that significant push to the downside, however, in the RSI, there's also the possibility that we get a break down through if Treasury yields continue to move higher, interest rates go higher. This segment of the market tends to be extraordinarily sensitive, generally extraordinarily sensitive to interest rate changes, specifically interest rates rising tends to push the Russell 2000 to the downside. And so as we start to see that, that is the possibility of breaking down through that resistance or that support level with a pretty strong push going on already, although it's coming back up off of the lows just a little bit here this morning. But we'll take a look at this in the shorter term and see if maybe that's a tradable instrument in this particular case. One other thing I wanted to look at really quick, I want to pop back over here to my single grid for just a moment. We're going to pop in here /VX because this is kind of an interesting scenario here. Yesterday we got a big gap up and then a sell-off in those VIX futures. Now sitting a little bit higher here. Volatility overall staying up in that, at least as far as the VIX futures are concerned, volatility staying up in that 20 range. We've been down in the 17s for some time. 16, 17, 18. Well, not quite down in the 16 handle. 17, 18 handle for a little while. Now we're sitting up in the 20 handle with the market moving to the downside. So now we're kind of back in more of that normalized relationship. But a big gap up sell-off in VIX futures yesterday. The VIX itself, the index itself that this is based on, saw, again, that same type of thing move to the upside early in the morning, and then it bled off. Now we're sitting back down around that 17 handle. So on the VIX itself, on the VIX product itself, sitting at 18 /VX futures, sitting at 20, there's an arbitrage possibility there. And the arbitrage possibility is, and this is one of the reasons why, and I wanted to bring this up, that futures and the underlying indexes or instruments tend to move in correlation with one another, is because there's an opportunity for institutional investors. And that's primarily what drives these arbitrage relationships. Retail investors, more often than not, don't necessarily drive these intermarket relationships like this. But you think about it, an institutional trader could sell high-priced VIX futures and buy options, long call options, for instance, on the VIX index, because the VIX isn't a tradable instrument, right? Now, other ways that they could play that opportunity would be because likely the VIX rising is going to be a function of SPX going down. So a futures-only institutional trader could go short SPX futures and short VIX futures in a pairs trade and look for both of those instruments to move to the downside. Now, that's different than what we've been doing on, say, for instance, our 2 different expiration month calendar spreads on crude oil, where we have 2 different delivery dates for essentially the same product and those different delivery dates. This idea would be more of a pairs trade. As SPX goes down, VIX is likely to rise. And so there's a number of different ways that could be, that arbitrage, intermarket arbitrage could be traded. But one thing to think about is VIX tends to be mean reverting minus exogenous or exterior outside events creating those spikes. So we saw the spike a little bit yesterday in the VIX itself, and that bled off very quickly, but the futures are staying elevated. So the futures may be seeing some downside pressure. So we're going to start there with this discussion in terms of looking at VIX futures to the downside. And as Kelly points out, we've got things like oil up, we've got US dollar up, and we've got 10-year rates all up. All of those serve to maybe be keeping VIX elevated or /VX elevated a little bit. We're not really seeing it in the VIX index itself, which is what ultimately drives this. So let's go here to our shorter term chart. And I'm going to put on here our futures grid. And we're going to take a look at /VX, the VIX futures. And the first thing we're going to do, you're kind of seeing that pressure here to the short-term upside. But let's take a look. I'm going to just maximize our sells here. We'll take a look at what's going on in the VIX futures. So let's talk through this. Tick size 0.05. That means that this 5 right there is our significant digit, the last one in that price. The tick value is $50. So every time that changes, that is a $50 increment in the price of this contract. The point value, if 20 goes to 19 or 20 goes to 21, that's $1,000 change. $1,000 times that number gives us our notional value. And if we pop our drop down here to, in the symbol, we drop down to futures, we see that our initial margin to go long or short this contract, to essentially be bullish on the contract or be bearish on the contract, is the same. Sometimes those numbers are a little bit different, reflecting different levels of volatility in one direction or the other. But about $6,699 of initial margin to enter this position, or to establish this position. So, given where the VIX is, and given where the VIX futures are, looking at that possibility of maybe taking this to the downside, we're seeing this kind of little inside day, if you will. Now, there's a couple of things to think about. Now, remember, the index doesn't trade the way an equity product would trade. It doesn't behave based on levels of support and resistance. But the VIX futures may do that, perhaps to a lesser degree. Not saying that technical analysis is invalid when you're talking about trading VIX futures, because it's not. It does behave that way. But I think you probably have more influence coming from, thank you, Brent, for doing that. I think you have more influence coming from kind of the external relationship and that intermarket relationship than you do from technical analysis. So the fact that we've got VIX a little bit higher here, up at this high that we saw yesterday when we saw a bleed off, that may suggest in the short term that we see a bit of a move to the downside. Now, what do I mean by a bit of a move to the downside? Well, let's kind of hedge our idea of the VIX futures not working in the context of technical analysis by saying, well, this midpoint of that big red candle yesterday, right about the 1923 level in the VIX futures, is likely to be a level of support because it's been a level of support before. Now, even though we know that the VIX index itself doesn't behave that way necessarily, the VIX futures might. So we could look at trading from where the VIX futures are now, 2048, and trading that to the downside into what could potentially be a level of support. So I'm going to pop over here to the short-term grid. Now we're looking at today's trading 5-minute chart. And we've drawn that line in here. That line down to the 19 level is right about here. So I want to have some confidence in this downside move. So as a shorter term trader, what I'm going to be looking for technically is a break below this recent area in which this has been trading. Recent meaning the last 5, 10, 15, 20, maybe 45 minutes or so. And then a move to the downside here to that 1923. So let me show you how I'm going to set this up. I'm going to use this as my stop, because if it goes back up above that level, I'm not really interested in staying in a downside trade at this point. So let me just label this really quick. I'm going to use my chart tools to label this. That's going to be my stop, or my exit out of the position. My entry into the position is going to be a move below that level right there as the, not the target, sorry. Right click, edit. Let's make that entry. And this is going to be my target down here. Is going to be that 1925 level. And looking to trade this in the short term to the downside. So avoiding talking through this trade and not getting it on, let's put that in here. Let's go 2025 as our break point to the downside to get into the trade. So we're going to be going short the contract. In order to initiate that, we're going to create a sell custom with OCO bracket, because we're going to be creating a short position, theoretically, if this trade does what we expect it to do. So 2025 is going to be our trigger point. That's our if this then that statement. If the futures contract goes below 2025, then go short the futures contract, else wait. So I'm going to make that a stop. And in fact, I could do that as a stop limit and say, look, I want to get into this trade at 2025, but if it makes a big move to the downside, I don't want to lose some of that capability. So I'm going to say I'm going to put this stop limit in as getting into the trade at 2025. But if it goes below 2015, then I don't want to get into the trade. And I'm going to make that day order just because I'm assuming that this is likely, if this is going to happen, it's going to happen relatively soon. If I were to leave that as a limit order or just a stop order, that becomes a market order. If it gets triggered, that's going to get worked by the exchange. Now, my stop here is going to be in order to buy at a buy stop, which is stop wait. Don't buy this unless it goes to 2055. We're going to make that, I'm sorry, 2055. We'll make that stop 2055. And this is another one that we could do a stop limit on instead of a stop. We're going to do a stop limit and we're going to say, fine, if this moves up, I maybe don't want to look at buying this back if it goes up to 21. Let's make it 21. I'm going to make it 21.15. And we're going to make that good till canceled. So I'm going to give it a little bit of a range to the upside. That's a fair range to the upside. And then I'm going to look at taking this off at a limit order that says if this gets down to 1925, then take the trade off. I'm going to leave that as a limit order. So enter if it breaks below 2025. Take it off if it goes down to our target at 1925, or take it off if it goes up to our stop point at 2055. And so that's where we're going to get. I'm actually going to take that limit down just a little bit. I'm going to make it 21 even. That 21.15 seems just a little bit too long of a move to the upside to put my stop in place. So I'm going to click on confirm and send. We're going to read through this order, make sure that this is what we want it to do. And I'm going to go ahead and I'm going to put this in my futures group, click on send. And so I'm going to do this. I'm going to show orders on this page so that you can see it. There's my entry, my exit if it goes up, my exit if it goes to the downside. So that's what we're looking at in terms of putting this trade together. And it's starting to move to the downside. You notice that it came back up and it retested that stop area as a potential level of resistance. So looking at trading VIX futures to the downside. Now, a couple of other things that I wanted to look at here this morning that are moving, and I talked about energy products. Let's come back over here and let's put this on our side-by-side grid. I wanted to look at /RB. And this is the gasoline contract. This is RBOB gasoline. So tick size is 0.0001. So this is our significant digit. When that moves, that's $4.20. The 42 gallons in a barrel of oil. That in a barrel of oil, 42 gallons of gasoline in a barrel of oil. And so that's where we get this 42 multiplier. Point value is 42,000 times that number. That gives us our notional value of the contract. Click on the drop down so that we can see what our initial margin, 11,460 to go long, 10,236 to go short. So a little bit lighter margin on the short side, a little bit lower volatility in that case. But you've got momentum kind of moving off to the downside here a little bit. That RSI diverging. And okay, so here's what just happened. So the first thing that happened was our VIX trade just filled, and we're in that VIX trade. But let's take a look at this trade right here, which was one that I set up as we were getting started. So the initial entry into this VIX trade, or I'm sorry, this is RBOB gasoline, was a break below this support level that it's been sitting at around the $3.67 level, 3.67. Looking at going short RBOB gasoline contracts And the stop is up here, kind of right off of this resistance area at about the $33.72 level. Looking for this to make a move to the downside down to our target here. Target is right around $3.56 to the downside. So looking at that contract getting cheaper, taking advantage of that downside move. So going short, and we just entered the trade. So we've got the stop and we've got the target orders in place at this particular point. And one of the reasons for that was the fact that when I was putting this trade together and we're looking at it testing this level right here earlier this morning, that ADX indicator, one of those technical indicators that gives us a measure of trend strength, was sitting up at a fairly high extreme. I mean, it was above the 50% level. That suggests a very strong trend to the downside. So there's some downside momentum here. So what we're looking for in this particular trade is for the RBOB gasoline contract to make this move right here down to this target, and we're stopping it out up here. So if you want to think about this in terms of kind of a visual representation of risk to potential gain in the trade, this is risk theoretical, this is gain theoretical. And just looking at that visually, that's about a 2-to-1, maybe 2.5-to-1, 2.3-to-1 reward to risk ratio in this trade. I'm not really ever looking, and again, this is the gospel according to me, and this is not a recommendation, this is not a rule of thumb or anything else, but I'm not terribly dogmatic about specific risk to reward metrics in terms of a percentage or a ratio. I'm looking for a trade that makes sense not only from a technical standpoint, but from what a potential gain could be made, and more about trend direction and strength than saying that each trade has to have a 2-to-1 or a 3-to-1 reward to risk ratio before I enter the trade. Obviously, there's got to be juice to justify the squeeze, but that's a changeable scenario, right? Because this is the dynamic market environment. So we've got that trade working for us here. Let's pop back really quickly to our /VX trade, which just filled while we were talking about this. And let's see if that's doing what we expected it to do. And it did. It came down, triggered us out, and then it popped right back up. We got that little bit of a bleed down below. We're in the trade, and it's starting to rally up again for us, which is not what we want to have happen. We want to see this move to the downside, but that's a small move. Again, the reason we put this stop in place is to take this trade off, and that's triggered right here. That's showing where our limit is, but our trigger was right up here at 2055. And yep, and you're right, Cecil. 357 would be a pullback to the 20-day moving average on the longer term chart on RBOB gasoline. So while this isn't doing exactly what we wanted it to do right out of the gate on /VIX, it is moving and had been moving in that direction that we'd expected. Notice that the trend strength back to the upside, not very strong. We had a relatively strong downtrend here. Relative. I mean, it wasn't huge. So we'll see how this plays itself out here in /VX. Yeah, so choose corporate. Yeah, here's the thing. I mean, the trade mechanics, and I'm glad that you mentioned that in terms of being over your head. Let me show you some resources really quickly while we're talking about it. And I think this is a good opportunity to have this discussion. I'm going to pop back over here really quickly to schwab.com/futures. Schwab.com/futures. And if you go to schwab.com/futures, this is a great place to kind of get started with. I'm going to take you back to that /futures right here. Schwab.com/futures. This is a great place to get started. Choose corporate. So don't give up. Don't get knocked over by the fire hose of information. But this is a great place to get started learning about futures, explore the variety of futures markets that are available, how to get started in trading futures, and how does futures trading work. And then what I've popped into here really quickly is the daily futures commentary, which is a great way to learn a little bit more about what's going on. There's a lot of great commentary in there talking about the daily movement of different types of futures products, but the trade mechanics are going to be fairly similar to the other things that you're going to do. It's just there are some specific circumstances that we talk about and pay attention to when we're talking about trading futures. All right. So two other products that I wanted to look at here really quickly. I want to go back over here to our monitor tab, and I want to take a look at this trade right here that we put on last week. And this is our micro wheat futures contract. We entered this position when the futures contract was trading. We went long this contract when that futures contract was trading at 647. It is now trading at 667. It's been moving in an upward direction, which is exactly what we wanted it to do. You can see that our profit and loss for today, profit and loss since we opened the contract, since we opened this position is $100. Profit and loss today, we've come back from a big move in the opposite direction. So it's made a move that we have, expected. And then this is going to get updated based on that move, that daily move. But let's go to the chart here really quickly. And let's take a look at / MZW is where we were. So let's go to / MZW. And let's look at the longer term chart here. Let's restore those cells. And let's go over to this side because we were looking at this and being a longer term trade, maybe more of an intermediate type of trade. So we got into the trade. When it broke above this level here, we put a stop order in place. Down here, our target is that kind of bull flag type swing trade, and it's been doing what we've expected it to do. But you can see in the last two trading days, we had that big downside move, tested our support level that we used as an entry, and then has rallied up, and it has continued to rally up. Volume's fallen off a little bit, but momentum is staying bullish in this particular case. And so as we're starting to look for this to move to the upside, a couple of things going on. The Department of Agriculture issued their demand summaries for agricultural products. One of the things that was not taken into consideration, because China has not purchased U.S. corn or U.S. wheat, at least not in any significant numbers, in the last 2 years. So all of their estimates, all of their demand estimates for corn and wheat are based on no Chinese demand. So there is some kind of implied idea here that if China does normalize agricultural purchases, because prior to that 2 years ago, China was one of the primary buyers of U.S. agricultural products. So if we start to see Chinese buying coming back into the grains and the agricultural products, that's going to lift demand. Now you can see what demand has been doing for this product. I mean, this product has been getting more expensive. This is micro wheat futures, expecting that wheat prices are going to be higher in the future. And for sure, Sam, you're absolutely right. This is a bullish setup, that potential move to the upside. But what I want to do really quickly here, let me do this. I'm going to show my orders on this chart as well, is I want to move my stop up a little bit because my stop is still down here around the 600 mark from my initial entry into the position. So what I want to do is just very simply grab this stop order, and we're going to move that. We're just going to slide that stop order up to the point where we are right at even with where we entered the contract to begin with. And I'm going to put that stop order in place so that now we're at least sitting at kind of that break-even point. And the concept is our stop, theoretically, if that were to get filled, we'd be at that break-even point in the trade. Still have the same target, still have the same bullish setup, but that's kind of what we're looking at here in this particular case. Yeah, so E is enter, T is target, stop is stop loss, is stopping out of the trade, where we would exit the trade if it went against us. Always looking to have the idea of being a risk-defined somewhat risk defined because we can't guarantee the price that we're going to get filled, but a theoretically risk defined trade. So can we exceed that? Sure. Yes. A fast moving market, we could see prices move outside those ranges or orders not get filled or get bumped through those protection bands. All right. So a couple of other things that I wanted to talk about here really quickly in my list of things to discuss today while we're here on this futures grid is /MBT. This is the micro Bitcoin futures, which we talked about last week a little bit. We talked about this in relationship to being able to see spot crypto prices charted on the chart. And spot crypto trading is coming. In fact, starting June 1st, I'm going to be teaching on Monday mornings a webcast series with Jim Ferrioli from Charles Schwab, a webcast series on trading or on understanding crypto. We're going to get to trading later, but /MBT is the micro Bitcoin futures contract. And if we take a look at that, it is an initial margin of $2035 to get into a position either long or short. This tracks /MBT and /BTC, the larger contract, are all based off of spot crypto. Spot crypto can be charted by looking at BTC /USD, US dollars. That's spot crypto. Okay, that's the spot price. If you were to go and buy through whatever brokerage or whatever dealer or whatever mechanism, if you were to go out and buy spot Bitcoin, buy a Bitcoin, you would pay $76,738 for that one Bitcoin. That's the current spot price. But we look at this in this class in trading the futures and trading the micro Bitcoin futures and looking for this to potentially make that move. It's kind of range bound. It's bounced back down into this resistance level and then back down into a support level. So at the moment, with RSI falling off, maybe looking at taking this as a bearish trade to the downside. There seems to be some bearish influence here, at least initially. But I wanted to show you that one in terms of that relationship. Not really at a tradable point yet. And if we look at the shorter term chart, kind of getting to that point, maybe looking for a break of, let's put a support level in here. But we don't really have a strong trend one way or the other. But some traders might look for a support break somewhere in that area for that move to the downside. That would be a break out of this kind of sideways range bound area that we've been in. Now, there's one other contract that I wanted to look at, and it's a trade that we've been in for some time. And so I want to pop back over here to our left-hand side and I want to look at this /MCL. And this is crude oil. And crude oil has been sitting kind of right up around this $100 level. And I'm just going to draw that 100 line on the chart right there. And it's been oscillating up and it's been oscillating down. But one thing that my good friend Rachel Deshelle pointed out this morning on X, and by the way, you can follow me, you can follow Brent, you can follow Rachel, you can follow all of the coaches on X. I'm at Ben Watson CS. Brent is at Brent Morris CS. Rachel is at Rachel-CS. But she pointed out this large symmetrical triangle that is setting itself up here in crude oil, with the possibility, if we were to look at the measured move here, kind of at the base of the triangle, that would put us up around the 117 or 118 level to the upside, or potentially down here to about the 79.5, maybe the 80 level to the downside, if price were to break one direction or the other. We're kind of going sideways and we're kind of squeezing. And you notice that volume overall is kind of settling down a little bit too as we get closer to the rollover into the next expiration. But there does also seem to be kind of a momentum settling down as well, in that, maybe there's this apex And we've seen this happen before. It's kind of come into this range. So we might be looking for a breakout one side or the other. Now, the general idea is that price breaks out of an ascending or out of a symmetrical triangle in the direction of the prevailing trend coming into the triangle. So we could argue that we had an uptrend coming into the triangle. So the likely directional move to the upside or is to the upside. But that's not necessarily a guarantee, especially if there's a resolution to this from a geopolitical standpoint. If there's a resolution, that break could be to the downside, could be hard and fast, and move us down into that $80 range pretty quickly with that resolution. Now, this is where politics gets into the mix, right? Because if we take a look out into the future, because we've got this crude oil calendar spread that we've put on on and had on for a little while, we are short the crude oil contract, the micro crude oil contract in this front deliverable month. So we're already prepped to have this go down, to take that break to the downside. But we're also prepared for this to maybe be a little bit longer lasting in the expectation that the longer dated contract is rising in price, which has been working for us. So overall, we're just about even in this calendar spread, but we're looking for these two prices to come closer together. The shorter dated contract to go down in price, the longer dated contract to go up in price, and kind of seeing that relationship between those two. So we're going to keep an eye on that one. Not, I don't think, really necessarily absent news tradable at the moment, but I wanted to make sure that we were still there. Now, what we've got to pay attention to, though, as we look at micro crude, is when we need to shift this July deliverable to the August deliverable. And that's probably next week, maybe even 2 weeks away, as we start to see that volume really kind of to shift. The volume's already starting to build in the August deliverable, but it's still there in the active contract. And the Thinkorswim platform is always going to show us that active contract. All right, really quickly, if you want to learn a little bit more about this, like we said, come over here to futures on schwab.com. But you can also come back over here to Trader Talk's webcast page. For those of you that are new to this webcast, just come on in here and type in futures, and you're going to get the futures playlist. You're going to get all those webcasts. Brent teaches this as well. He's got a Getting Started with Futures webcast that he did 3 weeks ago when I was out of town, where he talked about place your first futures paper trade. So that's a great starting point for those of you that are brand new to this discussion. And then if you want to learn a little bit more about that crypto, those crypto products, come over here to the live webcasts and virtual workshops page on schwab.com/coaching. And here's that webcast coming up on June 1st, Cryptocurrency Basics. And you can join me and Jim Ferrioli for that webcast. Love to have you there. My thanks to Brent Morris for helping out. My thanks to our great production staff. Thanks, of course, to all of you and our great reviewers. Have a good day. We'll see you soon. Take care. Bye-bye.